Welcome back to Money Exchange. Every week we usually hear from at least one or two central bankers with either an interest rate decision or policy statement that drives currencies. This week was no different, with Janet Yellen speaking at the congressional hearing on financial regulation. Glenn Stevens from the Reserve Bank of Australia was speaking in Melbourne at an economics conference after releasing the November rate decision on Tuesday. And the Bank of England released its latest thoughts on the economy. So let's have a chat, Mel, about whether or not any of these comments this week have made any significant difference to the way we look at things fundamentally. Let's start out and talk about Janet Yellen, because she said if incoming information supports that expectation, then our statement indicates that December would be a live possibility. Now, this comes on the back of a week or two ago. She said after the Fed two-day meeting that December was the likely time that they're going to raise rates. Is that your view as well? Do you see them raising rates this year? I certainly have the view that they will.
Well, if she says it, I sure as hell believe it. Yes, look, fairly obviously she's made it fairly clear, and as you say, a couple of statements in a row within a week, and they're looking for some nice data. We'll get some data tonight around 12:30 or 12:30 tomorrow morning.
And it's been positive all week.
Very positive, and all the expectations are that the non-payroll non-farm payroll figures will be high.
And I think they'll revise last month's up as well.
They might go up as well.
I think. Now, the thing is, I don't think that the Fed's going to issue a statement like they did last month, Yellen say what she did in the last 24 hours, and then not hike in December. But let's move on to the Reserve Bank Governor Stevens, and he said that subdued inflation meant that there was scope for more rates to go lower, or rates to go lower. If a change was required, it would certainly be an easing, not a tightening. Now, right now, interest rate swaps are pricing in a better than 50% chance we'll see a rate cut in December. What do you think, Mel? Do you think the RBA is going to cut rates?
Well, that's the only indication we've got, that they would cut, not that they would go the other way. So some of the data for Australia is very good, you know, car sales, properties, so and commodities have been less of a problem than we thought they would, somewhat compensated for, but certainly he's indicated that it would be a cut rather than...
I don't think there's any reason for us to change our fundamental directional view on the Aussie dollar.
Very clear.
And the Bank of England left rates unchanged at 0.5%. Obviously, we saw the pound react to that last night because the expectation is now they'll raise rates in the second half of the year. I still think the pound's going to see upward momentum against emerging market currencies and the yen, the Aussie and Kiwi.
The euro.
Do you agree?
Yeah, and the euro too.
And the euro, of course, yeah.
And clearly, in fact, they don't have to do anything with the interest rate for the pound to be driven higher.
Well, it's been rising for the last 3 or 4 years, isn't it?
Yeah.
I don't think there's any reason there for us to change our view. Now, the central bank Austrian president said that don't assume stimulus in December is a done deal. I think the market read that and got over that in about 5 minutes. I think we're going to get stimulus in December, and I don't think there's any reason after talking to Thanos tonight that we should change our view on the euro either.
Very, very clear. Thanos was very clear.
Yeah, all right. So right now, no reason to change our fundamental directional view on the Aussie, Kiwi, US or any of the currencies. The Canadian dollar, you know, the jury's out on that one for me.
It's always either way, isn't it?
Well, I think the Canadian dollar, it's so reliant on oil, but at the same time it's going to get that residual benefit from the US economy with the US improving. But there is an expectation from the top end of town or my colleagues that oil is going to probably remain pretty low for the coming 12 months or 18 months, so we should see downward pressure on that Canadian dollar. So are you in any positions on the Canadian dollar at the moment?
I am at the moment, actually. No, sorry, I just got out of one this morning, the US CAD. But I had to because of the technical
setup. Your expectation is for it to fall, though.
Still, for the Canadian. Well, after all, with oil probably, as you say, being weaker, but it's not a strong differentiation. That's the only problem I have with the Canadian trade with the US.
Yep.
It's not super strength versus super weakness like US and euro.
I have a price target of the USD caddy at 140.
Okay.
Yeah. Let's get to our currency quiz question of the week. But before I give you this week's question, I want to congratulate Chris from Melbourne on being our winner from last week's show. So here we go for $500. Be the first person to go to moneyexchangetv.com and answer the following question and you'll win this week's cash. Here we go. In what year did the Aussie dollar versus the US dollar hit 47 cents? 47. It might be on the way to 47 right now. I'll give you a hint. It was between the year 2000 and 2008. In what year did the Aussie dollar versus the US dollar hit 47? Go to moneyexchangetv.com and type in an answer, and if you're the first person to get that correct, the Aussie dollar versus the US dollar, when was it at 47? Then you win $500 cash. Mal, that'd be handy to have in the trading account for a little bit of extra bonus.
That'd go well.
Well, I hope your trading continues on its winning way, Mal. Congratulations on this year. Thanks so much for joining us on the program tonight. It's been a real pleasure.
Thanks so much, Andrew. It's been fun.
Well, that's all we have time for this week. Thanks for your company, Mal. And until I see you again next week, bye for now.